What's up, everybody? In this video, I want to give you 5 ways that market rallies are more refreshing than a brand new pair of socks. Let's get started. First, when markets are in sustained downtrends, most people tend to be in disbelief. They don't think that the rally could possibly be for real. They think that it's another opportunity to sell and to maybe sell into a little bit of strength or be able to cut or minimize their loss. They think that they don't see the other side of the equation. They don't see that maybe the market just bottomed. Maybe this is an opportunity to buy. And so when we're ready, when we see multiple things setting up, and I'm not just talking about one index or not even just talking about a couple of indexes, but when we start to see other things like we've spoken about in other videos, like the number of new lows start to dry up and the number of new highs being made start to rapidly expand. When we start to see leading stocks start to consolidate and then take off, and when we see leading industry groups start to form consolidations and all get ready to make a move all at once, that's something that catches most people off guard. It's something that gives us an opportunity to capitalize. The second way that rallies tend to catch people off guard are when the market has been chopping around sideways for quite a while. We've seen this recently in February to about May of this year. The market has just been consolidating sideways, and it's been consolidating between its 50-day moving average and its 200-day moving average, just kind of chopping around, going sideways, going nowhere. But there have been, again, some leading stocks that have started to consolidate ahead of the major indexes and have started to break out. The way that we're going to get ahead of these rallies and get the jump on a lot of other market participants is to consistently do our routines, to consistently watch the stocks that we've been tracking all along, to look at the stocks that are passing our scans week after week after week. And then as we see those start to consolidate and form up strong setups that we can then capitalize on, that's the way that we're going to beat the market. That's the way that we're going to beat other market participants. Because we're ready, because we're prepared, and because we're consistently following through, it's going to give us the ability to then take advantage of these lower risk entry points and be able to beat the market. The third way that market rallies tend to surprise is through the leading stocks that actually start to set up and then break out. We highlight many of these in our Elite Stock Setups report. We look for stocks that have been leading the market higher, leading their respective industries higher, and we see when those stocks start to consolidate. They'll typically be near their 52-week highs, and most people neglect these stocks. They think that, hey, they've already run, I don't want to deal with those. I'd much rather go for a stock that's trading near its lows because maybe it can get all the way back up to its highs. But let me ask you this. If there's a stock that is now trading at 100 and that stock started down at 20, how did it get to 100? First, it went to 21, which was an all-time high. Then it had to go to 22 and 23 and so on and so forth. So what we really should be looking for is not the stocks that are trading near their lows, but we want stocks that are leading stocks that are trading near their highs. Another thing that we want to look for in those stocks, ideally, would be volume discovery. So what does that even mean? So when we look at the volume on a chart, typically it's at the bottom of the chart, and I'll post one right here. When we're looking at the volume, you typically want to see the volume start to climb up as price goes up. That's a sign that the major institutions, the ones that are pretty much controlling where price is going to go, that they're in there, that they're buying shares, and we basically want to ride their coattails all the way up. We are not the whale in the market, right? Like we're just those little pilot fish that are going to be swimming along the shark, swimming along the whale, and try not to get eaten, but we just want to follow along in their path. If we start to stray from their path, that's when we're going to get eaten. That's how we're going to lose. When we stay with those bigger fish in the sea, that's how we're going to win. The fourth thing that tends to surprise people and catch them off guard is that leading industry groups will typically lead the way too. Here's what I mean. So when we are monitoring our watch list, when we are looking at the stocks that are routinely passing our scans, there's going to be blocks of stocks that end up passing at the same time. One of the things that I love to look at, especially using ChartYourTrade MRI, is to see which stocks are passing at the greatest rate in one set of time. So, for example, if we run the scans today and we happen to see that the software and programming group is passing at a much higher rate all of a sudden, then that means that we should probably take a look at the stocks within software and programming. Same thing for biotech, same thing for construction, same thing for anything, really. When a large group of stocks start passing our scans at a much higher rate, it's something's going on within that industry group, and it's something that we'll want to investigate. Sometimes it turns out to be nothing. Sometimes it means that a lot of stocks have already run in that group, but frequently what it also ends up meaning is that there'll be a lot of stocks within that group that are presently setting up. And because stocks of a feather tend to flock together, we want to pay attention to what those industry groups are doing, and then it gives us the opportunity to then follow along with that leading industry group and potentially catch a leading stock within that industry group, and then we'll be even further ahead of the curve and further ahead of the market and further ahead of other market participants as well. And the fifth and final way that market rallies are more surprising than a new pair of socks is by getting in early. So here's what I mean. When others are waiting for the market to confirm its rally by breaking out to new highs, we want to look for consolidations in the market, in leading stocks, in whatever it is that we are analyzing. We want to see that consolidation. So we want to see that wide and loose price action. We want to see it start to tighten up. And when it's starting to tighten up, we want to see it break above those consolidations, like we have seen in the NASDAQ recently, how we've seen in the S&P 500, how we're seeing in the Dow presently. When we're able to get in early, we're getting in ahead of the crowd. If we're not just waiting for the market to make all-time highs, it gives us an opportunity to, yes, we're going to get in early, we're going to get in ahead of the crowd that way, but it also allows us to get in much closer to an important support level, like the 50-day moving average, like a floor that the market has built over X number of weeks, X number of months. And by doing that, it gives us a clearer way to exit if things don't turn out our way. That's one of the most important things that we could do tactically when we're looking to trade. We want to be able to get in as the market starts to confirm by getting in at those advanced entry points, but we also want to get in as close to a major support level as we can as well. And the reason why is because if things turn against us, we want clear confirmation that we should be exiting. We don't want to have to wait for getting in close to the high and then having to wait for an exit down here to finally exit. What we want is to be able to get in here, but be able to exit right here if things turn south. So that was interesting, surprising, and a lot of fun. I hope you had a lot of fun too. If you did, Leave it down in the comment section below. Let me know what you think is surprising about market rallies. If you have any questions at all, leave those down in the comment section below too. I'd be glad to help you out. Thanks so much for watching. I really, really appreciate it. If you like this video, click that thumbs up button. That's going to help us out a lot. And make sure that you subscribe to the channel so that way you get every single update. Thanks again for watching, and I'll see you again in the next video. Take care, and have a great day.